So it's currently Saturday after the previous, not the previous, but after the week 3 of March that was traded, and that was a live stream, not live stream, but that was dated from this past week, which was week 3. It's currently week 3 yet because the week only ends on Sunday and it's Saturday. So I'm now doing the weekly recap from this Monday till Friday trading days, analyzing, thinking, and it's like I mentioned all the times on the description of the videos, is a study of time and price. It's a simple recap, not my main recap that I do on the weekly basis because after the weekends I do a recap on paper, similar with bullet points, so then I can do this video recap, which is a thing that which is a task and habit that I discipline myself to make it every single Saturday slash Sunday. Depends if I'm too busy on Saturday and don't have time to do it, I'll do it on Sunday. And it's just a quick study of time and price throughout the week, studying the weekly open, high, low, close, how I could capitalize on the week, what went wrong, what went right, and everything related to this week. And sometimes I even share my forecasts, uh, which helps a lot because talking in real, not like writing and texting on the chart, but really talking about what you feel, what you think that's going to happen next, makes your things, makes your ideas, your forecasts, your recaps, your studies stick in your head. I found that since I've been doing this, I'm getting a whole lot better in not predicting, but in weekly bias and in daily, not in daily bias because on the daily I do not talk in not talk what is going to happen next, but my bias for the weekly candlesticks and my bias overall for sometimes even the month or the quarter. When I talk and I speak, I really speak what I think when doing these recordings. Helps me a lot. Helps me a lot to solidify and to have a foundation of understanding on my head. So then tomorrow, when I do my weekly forecast, I then can not go back to the video, but I already have the foundation in my mind. I already have the ideas and the concepts and what I'm looking for in my head as a foundation, as a base level, and then I can pyramid over it, making my weekly forecast and weekly plan. So starting, how do we start the week? Pretty simple. I write March and the number of the week. It was week 3. It was between 18 and 22 of March. And then I write if it's an high impact news, a low impact, medium impact, whatever. It's a high impact, and then I immediately write news events for this week. So let's see what the news events for this week were. Uh, uh, so from 18 to 22, like I mentioned, and we have a lot of daily news, weekly news in this case. Monday and Tuesday no news, and then Wednesday, Thursday, and Friday with a whole lot of news. What this tells me is that the week is going to be more volatile and more free to move on these last 3 days. So I want to put myself in the best and in the most and the highest probability days, being Wednesday with FOMC. I do not tell you to watch FOMC, but then Thursday and Friday are really good days after FOMC because I was going to study. In this case, FOMC was used as a manipulation move. So the FOMC delivery was used and was basically it was to capitalize and to induce longs on a weekly basis, on a daily basis, and then it was quickly reversed on Thursday, and we're going to study that. But we had CPI, GBP CPI, so the pound dollar CPI at 3 a.m., followed then by the real, not the real, but the USD uh, FOMC, which is the pair that euro and GU are being traded by. So trading EU is trading the variation of price between euro and the dollar, basically. So then we have the FOMC, the USD FOMC on Wednesday late PM session. This followed by Thursday with a lot of news, and on this Thursday with a whole bunch of euro and GBP news and USD. This was when we had the weekly reversal. But letting the charts some now out of the equation, just focusing on the news, I can tell that Monday and Tuesday, sometimes even with the news, they expand a lot. This happens a lot. Sometimes more in indices than on futures, I believe. But sometimes, even without no news, if Friday and Thursday had a consolidation, or if Friday consolidate and Monday consolidation, then we can expect Tuesday to expand because today's um, two back-to-back days of consolidation on Friday. So the Friday close consolidation, followed by Monday range, just consolidating. Then if Tuesday, even with no news, we can expect some measure of expansion out of that range created by Friday and Monday. But my whole idea would be to focus now on hindsight. I would say, yeah. I was thinking of focusing on Thursday and on Friday catch the Thursday I have the week and the Friday of the week. No, that was completely wrong. I indeed got manipulated myself by the markets. So I will tell you now my game plan, and you can and I and you can see how I was wrong, and that's completely fine. So expecting low prices based on the EU, GU, and DXY divergence. That SMT divergence I talked about on the previous weekly recap, where a new we have this range on GU and G traded above the range before then going lower. And I mentioned that we made a new eye of the year, while this eye of the year has been respected. Where uh, yeah, this eye right here has been respected. So we had price year trade to a premium of January, whereas GU traded above January I, which is right here, yeah, alongside here, trading into this Q4 of 2023 I before now having this inversion fair value gap, Microsoft shift, and expansion, a big expansion today, lower as we are going to study. Could focus more on GU, waiting to trade the week one order block, bearish order block that I believe that's going to form. What is this week one, not week one, but weekly order block, bearish order block that I'm talking about? It's simply the week one expression. What I mean by that, if I go into the weekly chart, we can see that we have a big bulky candlestick into a liquidity pool. A big bulky candlestick, and you can see that I add this range noted. What do I mean by I'm looking to the to the weekly order block that type of is going to be formed? So I mean that this expansion, so after this expansion, is not going to be followed by a retracement back to expansion because of the divergence with GU failure swing and EU turtle soup. But after this expansion, this week one a big bullish trending candlestick, I believe that okay, this is a manipulation move. This is a Judas swing. This is an expansion that is categorized as a Judas swing slash manipulation swing, whatever. It's not going to be a displacement retracement. It's going to be a manipulation reversal. So we have a Judas swing, then the real move, and this is where you have our PO3 forming with accumulation, manipulation as an expansion move, because that's the difference. ICT talks about that accumulation starts everything, then we have expansion, and after the expansion we either have the retracement expansion again or the reversal. If it's a reversal, then the expansion is going to be a failure, not a failure swing, sorry. It's going to be a manipulation swing slash Judas swing. You can call it whatever you want. ICT calls it Judas swing. I'm just going to say Judas swing. So this expansion was on my eyes. I was looking at a Judas swing. And if I want to see a Judas swing, this means that I want to see the Judas swing low being traded to. So the Judas swing inception being the week one low, I want to see this as a drawn liquidity because if price, I'm going to draw it because if price is going really to manipulate, if this expansion big bulky candlestick is going to be a Judas swing, then it means that it's going to trade lower, retraced, and then expanded. But if this move, instead of a Judas swing, is going to be a displacement swing, it means that price is going to expand, retrace, and then expand once more. And then here we can have another retracement expansion. So here you can have this, right, to end. Or on here you can have after this second expansion, we can have the reversal and so on, so on. So that was basically my whole idea is that on GU, because GU turtle souped, the GU traded and expanded into a liquidity pool to the 2023 Q4I, whereas GU respected this dealing range right here. So that was a simple explanation why I was focusing on that. I had noted this range. I was focusing on the week 1I, as well as if it's the week one low, sorry. If this is the week one low, we are close to the weekly open. And as we can see on week one, week two, and week three, we are above the monthly open price. So if this is the monthly opening price, we are above it after trading the liquidity pool, which indicates that a reversal is unlikely to happen. But just go watch another videos that I have. I mentioned a lot of whys I'm bearish because now I already in my mind I already have a not a string but like uh fuck it, not ligation, that doesn't mean, but that's a word. So I have something that's connected. Okay, so in my mind I already have the thoughts connected as to why I'm bearish. So it's not it's easy to explain, but my English isn't that good in some sense, and I'm a little tired today. So that's a quick with time, market delivery profile, expansion on week one, opening price, time, and then range, accumulation, manipulation, distribution, clear PO3. Expecting a big bulky down close trending candlestick into the week 2 and week 1 lows. Trading GU as the weaker one for lower prices, but I still have my eye on EU. So what I was looking for, a big bearish trending candlestick on the downside, meaning that I was looking for a Monday slash Tuesday eye of the week, followed by a quick and sharp expansion on uh, FOMC on Wednesday and on Thursday before the Friday close. Then I'm going to then talk a little bit more about this point because this point is now the recap of the week. So I'm going then to do the recap. But this is the place that I failed. My last bullet point for my weekly plan made on the past Sunday. I had this quick, simple simple sentence that that made me completely off by this week, which was watching and try to trade Monday and Tuesday even with no news. Why I was trying to trade Monday and Tuesday even with no news, and now I can go into the charts and talk a little bit more. So on GU, I don't think I'm going to continue because I'm more of a specialist. Even though I would like to talk about GU because GU has the pattern, not pattern, but how an price movement is going to form. So after a liquidity pool is taken, it's going to form the turtle soup, right? There's the turtle soup as entry one. There's the order block as entry two, and then it's going to form a fair value gap as entry three slash OTE. And those are the three patterns that Romeo talks about when entering a position. I think if you go to his Twitter or Telegram, he has it there. Not I think it's actually this. Also this GU range that he's talking about. So we have the formations of a price delivery, such not expansion, neither reversal, but our price swing is created is by first a total soup, then an order block slash change instead of delivery, followed by the followed then by the breaker slash OTE before reaching into the draw on liquidity. Going into the EU because that's what I want to focus on. Just take off this eye. And now going to the weekly OZOC slash weekly candlestick on itself. First, I was looking to trade Monday and Tuesday, which as I as I now study it, as I now can see on hindsight is wrong. But why? Why did I make this mistake? It wasn't a mistake, but I was led by this small candlestick on Friday. So the past week on Friday, let me just make this because this is important because it's an accumulation phase on the past week, and this accumulation phase was the birth of this, as we can see, price and retest into the accumulation order block. So we had accumulation from Friday, Monday, Tuesday, Wednesday. Then we have the Thursday big down close candle leaving the range, and then price retraced back into the accumulation, especially back into 50% of the accumulation and back into the order block before the expansion lower. So that's a quick thing that I learned watching the mentorship of 2016, the first episode, and yeah, price retraced back into this order block, and now it's expanding once again because that's what usually happens. Just close this right here, and then okay. So back into the recording. In Is it going to move or is it going to stay quiet, do nothing? It's going to move. 100% is going to move. In what days is price more likely to have a lot of volatility? In Wednesday, Thursday, and Friday, especially Thursday because of a lot of this move. Yes, FOMC and Wednesday is going to have a lot of move, but Wednesday and Thursday are the highest volatile based by news days. So we have both ticked. So yes, Wednesday and Thursday. Where's the weekly candlestick likely to go? It's going to go lower. Lower into week one low based on GU analysis. Is there any daily time frame drawn quick to back it up? Validate the weekly candlestick. Okay, let me just lower. Yes, to the week one low slash monthly opening price based on GU analysis. Don't trade inside the weekly candlesticks. SMT is very low probability and it's led by false moves. Expecting range. Okay, I'm expecting a trailing candlestick. So I'm going to engage on Monday and Tuesday and hold into Thursday and Friday, same week. And this is where I fell today. Where, as we can see, we had the Friday consolidation, like it usually happens, but you have a Friday consolidation. And it was followed by the Monday. I would like to say it expansion because we had Monday trading above Friday high. We can see that Friday acted as a range idea, right? And that on Monday and Tuesday, we have price trading above the Friday high and expand lower on Monday into the Friday low. So we have price not breaking the range, but trading outside of the range. So this Friday accumulation range was traded above it first, as we're going to study later. First, it was the range high on 7 a.m. right then followed by the Friday low. A quick and easy range high to range low idea. So immediately, I can say to you that if you traded this move and you hold it on Tuesday, anticipating that GU was going to trade to the week one low, meaning that I would be holding until GU traded to the week one low, as we can see on GU. Monday consolidated and created not an inside candlestick but a very indecisive candlestick, followed then by a Tuesday candlestick respecting this weekly fair value gap. I'm going to show you the weekly fair value gap that was created with the week 2 low. So the week 2 low was taken with a purge and a revert. Don't cap me on my concepts because I'm not. Sometimes I use like purge and revert and step, and I'm not talking the correct way of it's going to be mentioned. So just telling it. So yes, I could trade Monday and Tuesday, expecting lower prices, but if I held an open trade based that I thought that week one and that Monday and Tuesday were going to trade into the week one low, then I would then be stopped out on on Wednesday, right? So I'm going to study now the weekly candlestick based on the Ozok slash one shot one kill based by the weekly reversal. And yes, if I'm bearish, yes, if I have a lower drawn liquidity, yes, if I want to look for lower prices, this means that this Friday is a drawn liquidity, right? If I'm looking for these lows, let me just put in here an emoji. So if I'm looking at these lows to be traded to, it means that every single low I want to see taken, right? So this Friday low I want to see taken, this Monday low I want to see taken, this Wednesday and Tuesday low I want to see taken. Even this Friday low that was made yesterday, I want to see taken next week because my higher time frame drawn liquidity is this. And if I have if I have a draw liquidity that isn't taken yet, any failure swing, any swing point right here, every low, it's going to be taken, and I expect it to be taken until I reach this key level, right? Until I reach this drawn liquidity, and then here we can either say retracement, lows being respected for short-term condition for short-term bullishness before then another leg lower, or you can now have a change in the state of delivery, where from expecting lows to be always taken, now we're expecting highs to be always taken, and the market exchange is delivery. So because I'm looking for lower prices all the time, and I have a weekly drawn liquidity lower, and I have a daily not a weekly drawn liquidity, I have a weekly bias for lower prices, I have a daily drawn liquidity by seller prices. This means that on Monday I could easily trade this Friday range. So Monday stop above the Friday high, range high taken to range low, and I could be completely done for this week because my idea and because my model pan out. But, and it's a big but, if I was holding the trade until the GU reach the week one low, because I'm expecting GU to trade lower into week one low, then if I held EU based on GU, I would then be reversed and price will trade into my stop loss as the manipulation move from Tuesday low to Thursday high. So manipulation slash should swing inception to should swing end, which is the reversal slash distribution starting point. So that's basically it. I'm just going to take a quick pause and then I'm going to resume and talk about the times that those highs and lows are made. Oh, this big black box was the premium week, and now this premium week needed 4 days to be made. 3 days and some like uh, 8 hours, I think, or 9 hours. So I'm going to be back soon. So now going for the weekly Ozark. One shot, one kill after talking about the Monday possible expansion trade, which is not really an expansion because indeed price moved 40 pips, but I can easily say that Wednesday candlestick was way bigger, and Thursday was like 100 pips, 87. So we can already see not a difference. Why is this red right here? I have no idea why this bottom thing is red. But there's we can see a difference between the Monday and Tuesday no news on the charts. Monday and Tuesday no news. with creating this rangy candlestick and then this not indecisive but usually as a reversal candlestick with this big discount wick. Whereas then on Wednesday, Thursday, and Friday, which were the days with red news events, price was big and bulky with bigger bodies of the candles than wicks. And this gray box right now is just me showcasing the weekly open to weekly high, and that we had then this was the weekly body candlestick, the weekly candle, the body of the weekly candle, whereas this was the premium wick. And we can see that on the premium wick that was made with 50 pips and the whole body was made with 83 pips on the downside. So we can already see that we have a Thursday eye of the day, eye of the week, which was a Thursday eye of the day, followed by the reversal lower, reversal into the Judas swing low slash Judas swing inception, because that was the inception of the move on Thursday, with the Wednesday retracement to make these equal lows slash double bottom, followed by higher prices. So now everyone is trying to buy because FOMC was higher, was a big bulky up close candle with a lot of volatility. So everyone on Thursday after the 5 p.m. open, everyone wants to buy and everyone wants to chase that price. So this has to show. And that's basically it for this week. So we have the Monday opening with a small candlestick. So this was Monday, Tuesday, Wednesday, Thursday, and then Friday. We have the Monday turtle soup above the Friday high, so Friday range high to then Friday range low. This then followed by the breakout of this range of Friday, where Tuesday expanded lower, making this Tuesday low of the day, followed by Wednesday retracement, respecting this low of the day made, respecting this previous low slash Tuesday low, creating these equal lows. Then on FOMC and previous FOMC price traded higher, followed by this quick expansion on the upside into this Monday high. So notice how on Wednesday and Thursday we are above the weekly open. We are also above this Monday high, and we are at this premium array that I mentioned on daily charts, coupled with the accumulation, where then price reached and traded perfectly into the 50% of the range of the accumulation range that then originated this expansion lower on Thursday. So after Wednesday trading higher, then it is followed by Thursday reversal, first candlestick. So this was between 5 p.m. and 5 a.m. on the morning. 99% sure that was made on the London session, a manipulation. So the high of the week was made on the London session, making the high of the day. Then followed by an expansion lower. Same thing on the weekly. Same thing here, where we had the week one expansion, which I can classify that as a Judas swing and not as a displacement swing. Same thing here, where we want to classify the Wednesday expansion as a Judas swing and not a displacement swing. Because if it was a displacement swing, then on Thursday we would want to see the order block respected and retracement to then a recontinuation, re-expansion on the upside. Then followed by Friday, small premium week made possibly on Asia slash London, and then lower prices followed by the last 12-hour candlestick of the week being very small. On the 4 hour to end this, because I do not want to go into the 8 hour. I think there's no need. I can go to the 4 hour, and that's basically the 8 hour divided, not divided, but uh, added more 3 candles because yeah, 8 divided by 2 equals 4, so we have to have more 3 more candlesticks of 4 hours. But that's basically it for this week. We have weekly open, price traded immediately higher into this Friday high, range low, accumulation below the range low, Notice all the bodies closed below it. Notice how immediately the first was close below it, followed by a Shopee close once again below it, another close below it, and another close below it at the 9 p.m., which made the eye of the day for Tuesday. Above this, also, buy side liquidity pool, low time frame I, which is an I time frame fair value gap slash CB low. Then, once again, an expansion lower, making this low of the day, price to die into the fair value gap, consolidated a lot on it. Then on Wednesday, before making the low of the day for Wednesday price, Turtle Soup this as a range high, expansion lower, respecting and making equal lows slash relative equal lows with the Tuesday low. This then is the birth and the birth of this expansion on Wednesday, which is a continuation from this Tuesday low as the shooter swing inception. Price expanded on the upside, trading above the Tuesday high, the Monday high, and then reaching into this premium arrays. Notice how on Thursday we have this 1 hour 4 hour hour of the day. So this was made on the London session. So meaning that on the London session on Thursday, we are above the Asia range high. We are above the Tuesday, above the Wednesday, Tuesday, and Monday high, which is the 3-day look back that ICT talks about. I don't know a lot about this, just a very small thing that I know. But we can see that the eye of the day was made on the Thursday 1 hour 4 hour candlestick, meaning that the eye of the day, the eye of London, made on Thursday, making the eye of the week was made at this time. This then followed by a quick expansion lower. At this fair value gap, price retraced into this up close candlestick and into a premium slash OTE, as we can see, an OTE before expanding lower once more with energy on the New York session, followed by a consolidation. Everyone was entering here expecting the classic OTE, right? Oh, big expansion, back to such a shift, retracement. Now it's an OTE. And everyone was expecting that. Whereas, not whereas, instead, on Friday we have the Friday eye of the day made after trading into this 4 hour CB, which was the 1 p.m. eye, making this 5 p.m. eye of the day, meaning that between 5 p.m. and 9, not 9, but 8:59 p.m. there was this eye made, price and expanded lower. Then this premium week made on London was a quick, a low time frame premium. If I go to the 50-minute, we can see that price traded this premium right here. We have this turtle soup at the midnight opening price, lower, higher, lower, closing below it, order block slash mitigation block. This can also be mentioned as a breaker block, right? But imagine that that we bought right here, then the price traded below it. So now we have this mitigation block that we can mitigate and now sell because the market profile and the weekly profile is bearish. Then we sell and then it traded lower. London low of the day made, which was the retracement slash OTE inception. OTE end made on the 10 a.m. then followed by another continuation lower. So this was basically the weekly review. A little longer. I think I talked more than I needed. Yeah, and that's it.